What is up, everybody? Solomon here. Today, we're joined by two builders who are tokenizing the foundations of traditional finance. So, gold and stocks. And I'm sure these guys are going to say more is on the table here, but they're putting these traditional assets on chain where they can move at the speed of the internet. First, we have Oro. These guys are bringing physical gold onto Solana as a tokenized real world asset that anyone can own, transfer, redeem 24/7. And then we have Remora. These guys are tokenizing publicly traded stocks on Solana, enabling instant settlement and fractional ownership of equities outside of traditional market hours. Crypto blockchain never sleeps 24/7. This conversation is obviously for informational purposes only, but this is what happens when you rebuild market infrastructure from the ground up. Let's start with the low-hanging fruit question. And thank you, Usman, times two, and Warbucks for joining, Oro and Remora. Can you guys just give an overview of kind of the problem and solution from each of your guys' organizations here? And yeah, thank you guys for joining. I'll start with Warbucks.
Yeah. First off, thank you so much for the intro. And we'll go with Warbucks since there's two Usmans on the stream right now, right? So the idea of Remora Markets really just came forward from the problem of access, really, because we're looking at we started off at tokenized equities, like you said, but since then we've branched off to metals, and we're exploring a lot of different verticals of different asset classes we want to bring on chain, right? So we started with five, and we've got our tokenized metals and tokenized equities on my background here. So we started with five, such as Tesla, Nvidia, MicroStrategy, Circle, and of course the S&P 500. The reason we went this route is because we understood that number one, companies wanted access to a lot more capital. How can we bring these companies, on the stock market, a lot more capital from around the world? Number two, how can we bring these companies to the people that want to invest in them, that otherwise there might be so many different hurdles, right? If you're, say, for example, you're based in East Asia or you're based in Africa, like just all around the world, you can't easily create a brokerage account to get access and exposure to equities on the NASDAQ, right? Or the New York Stock Exchange, number one. There's the whole KYC issue. There's the whole issue of setting up that account, being an American taxpayer, being an American account holder, whatnot. But then more often than that, we also have the average American degen or the average American trader also wanting to trade these 24/7. So it's not only about geographical access, but it's also about enabling the trading of these asset classes 24/7 around the world. And that's kind of the ethos of what's really pushing us out there. But we went one step further, and it's not just about bringing these asset classes on chain into like just a quiet little echo chamber for people to access, but also about what you can do with these assets, right? It's we basically want to create as much synergy with different DeFi tools as much as possible. So whether that's leverage trading, looping, I'm sure there's a bunch of stuff we'll get into it later on, but it's about access and what you can do with this money and to make your assets work for you, not the other way around. Oh, you're muted, by the way.
Dude, I have done 500 or 600 of these, and almost one every 2 or 3 times I end up muting myself. There's tons to dive into just from that intro statement. I would love other Usman, if you can give kind of an overhead of what you guys are doing. And yeah, thank you for joining.
Yeah, I think, for us, it's always been about what I would say is solving the three horsemen of gold. What are some of the core problems that this asset has faced for millennia, right? Number one is that gold is not as accessible as people think it is. And, we've seen queues in Hong Kong, Singapore, which are traditionally very deep liquid gold retail markets. Number two is that gold is inherently not yield bearing. There are pockets of yield that can be plugged into. And number three is that borrowing against gold, whilst actually traditionally was a very common thing to do, is just very difficult to do now. And, in some markets, people are paying 15, 20, 25% to borrow against their gold. And we thought crypto rails are very uniquely positioned to actually solve very core problems for this asset class, which is, now it's $30 trillion or above. And, we built our business around yield access credit, whether it's kind of and actually we don't think tokenization is the core play here, right? Because tokenization itself it's everybody's going to tokenize everything, and there's going to be 20 different gold tokens out there, and gold particularly also has a very different business model to stablecoins, right? Stablecoins earn float, they earn a yield on their backing. Gold doesn't, and so the value accretion happens at the product layer, at the utility layer. And so whilst we've tokenized the asset, and that's kind of that's the core of our business, we're very much focused on building different products around the asset. And we built out a yield product, we've launched an APR product, and there's a bunch of things that are coming on the way.
So yeah, you guys both said something that I find well, first off, Usman, I like that you said people are just going to tokenize for the sake of tokenizing. I mean, we're seeing this with stable coins too. Like, it's almost to the point where it's like, am I going to go to my local library in a couple of years and check out a book, and they're like, do you have library stable coin? And I'm like, this is ridiculous at this point. Same thing with tokenization. And I've heard this a lot from big players. It's like, you're not just going to tokenize assets for the sake of tokenizing things. It's kind of like, what can you do with them once they are on chain? And I heard both of you guys say very similar things as far as new products. And I think this is what's really interesting is, you take an asset that obviously has traditional value, is looked at as having traditional value, is looked at as a high type, like a security type, kind of collateral asset. You start bringing these things on chain, it doesn't lose any of those properties, but there's all sorts of new things that can kind of happen to that asset. I would like maybe if both of you guys can talk about the ways that you see traditional assets interacting with new products and new use cases as they come on chain. And maybe Warbucks, I'll start with you, because I know you kind of mentioned that as well, and then we'll move over to Usman from Oro.
Yeah, that's a loaded question. So just to reiterate, it's about how we can get these different traditional asset classes and kind of bring them different types of utility on chain, right? Which is one of the ways we kind of differentiate ourselves. Like I said, we started with tokenized equities because we've seen the demand. We're moving towards metals, and the conversation goes on and on. People are asking us, are we bringing on real estate? Are we bringing on oils? And like I alluded earlier, it's not just about getting access to this asset class, but also what it can do for you. And quite frankly, over the last few weeks, we've been ripping. Our volume has gone absolutely insane, especially with the integration of metals. We brought on 5 different metals, including silver, gold, and whatnot. And what we've been able to see is that the excitement really comes not only from finally giving the average crypto native user the access to this real to this real asset class on chain, no longer having had to off ramp your money or whatnot, but also to be able to potentially leverage trade it, access to different DeFi tools on loop scale. So there's something pretty unique that we did, which I quite pride ourselves on, that we did in December. So we were the first to bring leverage trading to stocks, for instance, right? It's kind of combining the best angles of TradFi and the best angles of DeFi, where you have the degeneracy of DeFi, but you have the fundamentals of TradFi. You get what I mean? So you can finally anticipate Elon Musk to push a tweet about Tesla or whatever the hell else he's talking about, and be able to leverage along, 10x. Now, this is not financial advice. Please do not open your longs for an extended period of time. Take care out there. But we've seen that sort of result in a lot of volume because people want that level of access and degeneracy that otherwise they may not have had within their traditional brokerage accounts, right? Number one. Number two, with Flash Trade, we've done a bunch of other stuff, such as creating a new yield-bearing token called FLPR. So within Flash Trade, there's this pool, there's this liquidity pool where if people can dump their different R stocks within, you are then given a token called FLPR that represents an index of these stocks. So people leverage trade from this pool, and if you want to do so, you have to pay a fee. So the holders of FLPR you're not only exposed to the price action of these pool of stocks already that you have held, but you're also exposed to the fees generated by these pools. So effectively, not only are you still holding this particular asset at spot, but you are also generating yield through the fees generated by people leverage trading from this pool. And of course, there's the whole loop scale angle. And I mean, that's what I'm kind of alluding to. It's this robust ecosystem that Solana has really become, right? Why are we on Solana? We have so many builders within this space that people are coming in and they're innovating as much as possible, and they're creating all sorts of different products with the new RWA asset classes we're seeing on chain. I was just on a conversation with another team. They were talking about creating different types of gold, for instance. So we have spot gold, right? We have gold R, which is our metal. but they talked to us about using, creating like another innovative layer of gold on top, which could create a low risk gold, a high yield gold, an income gold. So it's these levels of innovation that's just honestly just really exciting for me personally. And I think it is what brings people in, because it's not what we used to know. Like Usman said earlier, this is a very old asset class, but the innovation we're seeing now is, I would say, never before seen. You're muted again, sir.
I'm leaving myself off of mute this time. I think one thing, you know, there's so many things going on that it's almost impossible to pay attention to right now too. I think they have integrations with Solana, Hedera, all these other ecosystems, Archax. I'm almost positive they have Solana integration. They've done a lot of stuff with RWA tokenization. And like a month or two ago, they kind of announced these pool tokens is what they're calling them, which essentially within one token, you can kind of pool together all sorts of different real world assets. So you can have a portion of a gold allocation, you could have a portion of crypto, you can have a portion of stocks or treasuries or whatever, all kind of weighted within a single token, which is interesting. But yeah, Usman, from Oro's standpoint, and thank you for shouting me out, Warbucks, that I'm muted again. That's twice in the same call. You know, I think you said something very similar at the beginning. It's what you can do with these assets once they come on chain, and I would love your kind of broad take on that.
Yeah, I think, it's for us for gold. It's always been about, what are the traditional holders of this asset saying, whether it be retail or institution, right? And so I think the other problem that you can do is, you can go into the zone of just building because the dev said this sounds cool, and I think you have to really delve down into, hey, is this super relevant to this asset class? Because if it's relevant and if it's something that I would say a traditional holder of this asset is going to find interesting, is that's when you should do it. And I think what has been, because of how crypto is set up, you can really explore things really fast, and they might work and they might not work, right? But I think that's the beauty of composability, and I would say that's like the biggest benefit of crypto. So since we've launched, we've had products out with Loopscale. You can go long on gold. We had Turbo Gold with Carrot, which is pretty interesting. That if you again wanted sort of protected liquidation exposure, long exposure to gold, we launched a liquidity pool with Solomon Labs last week. Which was pretty amazing because you can kind of earn on your stablecoin liquidity at the same time you're earning from fees on the pool, right? And then there's kind of, I would say, we've launched our yield bearing gold product, which I think is pretty interesting because that's something that it's like, can you earn 3 to 4% APY on your gold in a very uncorrelated manner to DeFi returns? And all of these, I would say, are very, very, very interesting because it gives you exposure to gold in different ways, and there will be different people who are wanting different tastes of that. Somebody might want to be levered long on it. A retail audience might be, I don't want to be levered long on gold. I just want to buy gold and I want to earn yield on it. And that's simple as that. And I want that to compound. And so for us, it's always been about those very interesting use cases. And again, the beauty of crypto is that you don't need to do or build these things out yourself. You're going to work with interesting teams who can kind of work with you to do that, and so that's been quite exciting. I think, with some of the things that are coming out on our roadmap and with more composability, more integrations, it's going to lead to some more very interesting sort of primitives. Somebody sort of pitched to me yesterday a pool between, if somebody who's really long on gold but wanted to diversify their gold exposure on chain, you could just participate in a liquidity pool of 2 different gold tokens and then capture fees from the arbitrage there. So there's so much stuff that could be set up around this, and I think what I would love to sort of see at some point is hey, somebody comes on our app and can sort of see these different kind of strategies and different kind of exposures to the asset, and they decide obviously the risks are all clear on what those strategies mean, and they can sort of participate in those pieces, and I think that's really, really, really cool.
Yeah, I think we kind of go down the user experience route a little bit. I'm not muted right now. This is good. But and I think that is something that I would say over the past 18 to 24 months, we've seen a lot of progress made as far as user experience is concerned. And I kind of I want to go down the path of like what democratization of access into all these markets means, because you guys are dealing in exactly that. I think at the beginning in the opening statement, I forget which one of you guys said it. It's like, you know, people want access to different things, and this technology is going to give them that. I guess it becomes a question of, it's a two-part question, so I'll just start with the first part. How important do you guys, or what strides do you think still need made across crypto as far as user experience is concerned? A lot of people, for context, I like a month ago, I found the FCA in the UK, which is like the Financial Conduct Authority. They essentially are pretty much like the regulator in the UK. They put out a think tank study that was like, tokenization is essentially going to allow every citizen in the UK to have access to every asset class. But just because they can do something doesn't mean they necessarily should, because they might not be educated on those asset classes. And this is what's going to happen. I'm curious your guys' take on kind of the user experience. And as Usman, as you said, you want people to be able to come onto your app, see the risk involved, participate in, and every single person that comes on is going to be different. Participate in whatever makes sense for them. Maybe just broad takes on some of that stuff. Education, what's about to happen with kind of access into all these different asset classes, and how important user experience is going to be. Whoever wants to take it first. That's like a super loaded, drawn out question.
Yeah. I mean, my thoughts on kind of all of this stuff is that distribution is going to be king, right? And you can, like, going back to sort of what I said earlier, there's going to be 20 different tokenized gold stocks and 20 different, equities of the same asset, and all are going to be backed one to one. And then there's going to be some very interesting obscure opportunities which people will have. The reality though is, right, I think one is that what I expect is that who owns the end distribution, and when you see the actual retail in most countries, they're going to access it by the front ends they're already at. So maybe it's a Revolut or maybe it's a Robinhood. I see those venues winning, and those venues will do a lot of work to due diligence the opportunities they put on their app. And I think that's going to be, I would say, because the trust is, when Robinhood, let's say, has a tokenized stock, right? The user is just getting a digital version of the stock. They don't really care whether it's tokenized or whether it's digitized, frankly, right? For them, it's a digital exposure, it's a quick exposure. And what that means is that they're trusting Robinhood on that. So if something goes wrong there, they'll go after Robinhood. They're not going to go after the tokenized entity. But I do think, we're going to go through some very sort of stress tests with all of this stuff, because, there's a lot of these DeFi apps that are coming out. Everybody's getting one-click exposure to DeFi, and it's completely crypto abstracted, privy social logins, and hey, you have a high yield account of 8 to 10%, and all that stuff is crazy. But most of this retail don't really know about smart contract hacks. And so I think there's going to be a lot of this stuff that gets stress tested. And I would say the end front end is going to have a lot of power on who essentially ends up getting onboarded to those venues. And I think that's going to be, I would say, one of the bigger pieces to solve for any issuer, is how do you become institutional grade? How do you become very sort of, how do you have the right wrappers on that you can protect the end consumer?
Yeah, I think it's interesting. I tend to agree with you as far as, at least in principle, how people are going to interact with crypto and this technology. And the way that I look at it is, there's a reason that 99% of the people still aren't here. And it's because they're not going to change the things that they're normally doing. Like, they're still going to be using probably similar applications. They're still going to be going about their daily lives. Crypto, blockchain, distributed ledgers is kind of be embedded in that, because it's going to be embedded in almost everything that we do. It's an interesting take on like Robinhood and some of the platforms people are going to be using too, and how those platforms are going to be doing due diligence on the really native crypto platforms, the tokenization platforms, and it kind of all being mainstream that way. Warbucks, I'm curious your take on kind of democratization of access into all these markets, and the way that you see kind of user experience playing a role in the future.
Yeah, I mean, it's a very loaded question. I feel like we could go on for a good amount of time and break out the nuances, but it really depends on what part of the customer journey you're talking about, right? Like, first off, like Usman said, there's going to be a bunch of different providers for each tokenized asset. Could be gold, could be an equity, could be whatever. So you need to do your DD. So you have to ensure, at least until you have these more, quote unquote, more centralized authorities, I suppose, such as Robinhood, that in a manner of speaking, endorse certain providers by integrating them into their systems, therefore allowing access to their massive consumer base. Before that happens, there's going to be so many, like what we can see right now. There's a bunch of different tokenized gold providers on Solana, a couple of different tokenized equity providers. So you need to do your own homework before we can scale to that level of, getting everybody on board. Like you said, 99% may still not be here at the moment. So that DD angle of the provider, making sure everything's safe, making sure everything is secure, that things are backed one-to-one, that's going to take a little bit of time. And I think all these different providers right now are going through that process of, regulatory frameworks, and the law is still catching up. The licenses are still being created. So we're, in a manner of speaking, moving a little too fast where the law hasn't even caught up with us yet. So until the law does, I don't think we're going to see that level of adoption just at the moment, because it's happening now, and it just started over the last couple of months, I would argue, especially in terms of these different tokenized asset classes. Would stablecoins count as RWAs? Of course, they've been here for a while, but this is an entirely new ball game, and I think it's going to take some time on that front. But in terms of the DeFi opportunity angle, kind of what Usman touched upon too, is it's very, how do I say this? It's very scattered. Right? Even our own users at this moment. And I think we have about 13, 14,000 independent traders that have used different Remora assets. And we've garnered a lot of different types of feedback. One of the major ones is, it's cool that we have all these different DeFi integrations, but there's a bit of a hurdle in trying to understand the relevant risks involved, or what I have to do as an average degen, right? Because we're bringing in very quote unquote normie TradFi assets that maybe, my 14-year-old brother knows what Tesla is, right? So, but when I tell him, hey man, you could generate yield with your Tesla, that's just going to go over his head. So that is something, he's 14, so I don't know if that argument really applies, but my point is that that's the hurdle that we kind of need to cross, right? Where right now, when you're talking to a bunch of trader friends of yours, talking about owning Tesla, talking about owning Nvidia, I think what success would look like, what good distribution would look like, democratization would look like, is if the follow-up answer is going to be, so what are you doing with your Tesla? What are you doing with your Nvidia? Is it off-chain? Is it on-chain? Where are you generating your yield? My yield's better than yours. Those are the conversations we want, because we want that level of maturity to come in the ecosystem. And I think it is, because we went from degenning with NFTs, degenning with meme coins, to now talking about asset classes with fundamentals, no need to off-ramp your crypto, right? Your assets, and getting access to all sorts of, again, DeFi tools, asset classes, RWAs, whatever. The next step being, okay, so what can you do with all these tools that you have at your disposal?
That's awesome. Yeah, I love that verbiage. I might steal that for future interviews here, because I think that's super cool. It's super relevant. I think that is exactly the question that we need to be asking, because it's simplified down to the point of, like I said, it's about okay, so like a good example for people that aren't super crypto savvy. Like a handful of months ago, the NASDAQ filed with the SEC for a digital twin version of the stock market. And essentially within that filing, it's like, look, all of the compliance and legal representations of all of these securities are going to be exactly the same. It's just going to be about opening up new utility for these assets. So I think, Warbucks, you mentioned it perfectly. It's like, okay, the assets are essentially the same. It's about now, what can you do with them once they're on chain? And I think you're right. We've seen an institutional shift, which maybe we'll get into in a second here, but I've got to ask you guys like the super low hanging fruit question. Obviously with tokenized precious metals, like what's happened over the past week has been insane. You mentioned your 14-year-old cousin. My 15-year-old is like texting me about silver, and I'm like, what are we doing? Like, what has that been like? Have you guys gotten a lot of excitement for your guys' applications? And I wouldn't expect that necessarily. Obviously we can't control, metals prices and things like that, but you look at a high value, highly trusted kind of traditional asset, and now what you can do digitally, and looking at the institutional players, it's like all this stuff coming together at once. But what has the past couple of months been like with, it seems like every metal that I look at is simultaneously being,
dude, the metals are our meme coins now. It's crazy. I was actually on a space with Usman the other day, and we were chatting exactly about this. You know, like we're both South Asian, so I'm Pakistani, right? So I've got my uncle and auntie from back in Pakistan saying my gold jewelry is performing better than your meme coin portfolio, which is, you know, okay, that's true. I give in. It has been insane, especially the dude. I saw last 48 hours, silver pumped like what 40? No, 48%, 28%.
I
I don't know,
I
some
try not
crazy
to
shit
look.
like that.
It makes me like nervous looking at it
It's
because I'm just like, what
it's
is
been
going on?
crazy. It's been crazy, but you know, I think that's exactly what at least we at Remora. That's kind of our focus, right? It's we don't have stocks in our name. We don't want to limit ourselves to just one asset class. It's we started with equities. We've moved to metals because we've seen the demand there, and the entire world is left to still explore, right? People are sort of second guessing, and you know just seeing what sort of asset class will integrate next. Could be oil, could be real estate, but that's exactly the point. Is the whole idea is to bring all of this on chain, create that entire world within Solana so that people have access that no matter what kind of price action you may see, you know, yesterday it might be meme coins, today it might be metals, tomorrow it might be oil. So regardless, you should have access on Solana. You should have exposure to it on chain. And that is exactly the goal here. It's about bringing everything in at your fingertips, really. It's distribution. Like Usman said, distribution truly is king. That is the focus, and that is most definitely the goal. And the next step after is what can you do with it? But in terms of the stories with gold, I know Usman has a bunch of different, you know, anecdotes to share. So I'd love to hear him again.
I mean, honestly, last week was really crazy. I was traveling on Wednesday last week, and we'd gone to ask for to meet one of our liquidity providers to ask for more liquidity because that's how much demand we were getting. And I go to bed on Wednesday night, it's like 5,200, and I wake up 5 hours later, and it's like 5,600. And this sort of stuff has really happened in the gold markets. I mean, at least not in our lifetimes, right? And then gold goes down from 5,600 to 4,600 in a span of 3 days. And that's crazy because it's an asset which appreciates at a rate of 8% every year is like now moving 20% overnight. So that's been like it's been fun because we hit 1 million plus volume in our pools daily. We're getting more and more demand from sort of different sort of people to be able to buy large in size and whatnot. But also it's like I think when the inventory finishes, you have to sort of you have to go to tokenize the inventory and all that stuff. So it's been a great test for us operationally, but also I reckon that these swings in the market are not going to go anywhere, and they're going to continue. And so I think as a business, we need to be operationally prepared from every aspect to kind of be able to meet this demand as we go along.
Usman
Yeah,
actually
so
reminded me of something that, sorry, real quick, is when
okay.
we went live with metals with Remora as well. We went live with limited liquidity. I think it was about 4 weeks ago. So we thought, okay, let's see what the reaction of the market is. And we went live on a Friday, and of course, you know, markets are supposed to be closed over the weekend, so we couldn't really put in liquidity again. And the demand just it ate up all the liquidity within like 6 to 8 hours. So it was insane. It was us constantly topping up liquidity for the next couple of weeks, just like Usman said, and that resulted in some crazy volume for us. I think the highest we had was actually last week. It was a $10 million day. It was our first 8-figure day, and we've seen a 10x growth in volume. I think somewhat in tandem with the crazy metals growth, it has been, you know, agility, which I think is, of course, crypto's greatest asset. It's how quickly you're able to innovate, how quickly you're able to move. So it is about being first to market. It's about being innovative within the market too. So if you're there, you have these asset classes within your platform, which is what we're doing here at Remora. You have that access. You can bring that access to the degens and further. Then it's just going to be a good time for everybody involved.
I remember this was like last week at some point, and I read somewhere that silver brokers, whenever you go to like sell physical silver, were selling like $10 below spot, and my head was like leading towards like, well, is there potentially like some sort of arbitrage opportunity between like eventually between physical silver and tokenized silver on chain? It was really interesting because like the markets were moving so fast that like the traditional people that you would sell physical silver to were like, this is crazy. Like if you're going to get, So I don't know, and I think you nailed it too, Warbucks, where you said this. A lot of this stuff does come with the big players and the compliance angle. I totally agree with you. I think what we saw with the Genius Act, especially in the United States, kind of opened the doors up a little bit more. We have some more clarity. You mentioned real estate. I mean, we haven't even begun to scratch the surface with things that are going to be tokenized. Real estate, depending on what numbers you pull from, anywhere from $300 to $400 trillion asset class, which is, I think, total tokenized assets right now probably around 50 billion, give or take, excluding stablecoins. So it's going to be interesting to watch what happens. And you mentioned volumes. So I would love if you guys could kind of walk us through some milestones that you guys have had, so that people are kind of aware of the kind of the story. So I'll start with Usman from Oro.
Yeah, I mean, I think for us, we hit 3 million in TVL last week. We have 7,500 holders of the token, which is pretty insane. And we also hit like $1 million in volume. We now have, I think, north of $1 million in liquidity that's also deployed on chain. I think this is going to double, by the way, in the next 3 to 4 days. So we'll be the gold token with the most amount of liquidity on chain. Which is pretty amazing because, again, we want to incentivize people to sort of buy in size. And yeah, I would say like from a numbers point of view, those are like four sort of, I think cumulatively last month, we hit around $7 million in volume in the pools. So it's pretty amazing to see.
Awesome. And Warbucks, I would love from Remora's stance if you could give us some of your guys' milestones here.
Oh, dude. Okay, so I'm gonna walk you through a story. I was on holiday in Pakistan right over the Christmas break, and you're still plugged in, but perhaps not too much because volume's a little slow. Not too many people are trading, and I think by the first week of January we hit 50 million volume, which was we were pretty excited. We launched last September, so within the 3 months it was somewhat slow, but once we introduced, like I said, the flash trade pool, leverage trading for equities, things started to kick off. And by the first week of Jan, we had hit 50 mil. Fantastic. I was very happy. I was telling my friends and family. And we doubled that. We doubled our 3 month, almost 4 month cumulative volume in about 3 weeks to about 110 mil, which was absolutely insane for us. And we had our first, like I was saying, our $10 million day last Thursday, I believe. And we've crossed about 300,000 individual trades. We have about 14K different traders. So it's been a ride and a half. It's the response that we've been seeing is very overwhelming. We're very, very happy. And it's not just that, but I think another milestone I would say is how people are building on top of our product. There is this metal mining game that uses Remora Markets' metals to basically create like I said, a metal mining game. So you're playing that game and you're getting rewarded in silver, I believe. So that's pretty cool. That's innovative. Not only are the DeFi tools really cool that I talked about, right? The different tranches of gold, flash trade, loop scale. That's cool. Those are money making opportunities. But the game now, that's bringing the fun angle into it. And frankly, I'm a bit of a gamer myself, so that really excited. That was a personal milestone for me, and some of us in the team were very, very excited. But that, interestingly enough, that actually did contribute to a crazy holder count for our silver token. So I think overnight we went to 3,000 silver holders, which was the night before it might have been about 400 or 500. So silver, the number of holders we have for silver is the largest distribution that we have. So that was at about 400 or 500 people the night before, and overnight it jumped to about 3,000. I personally thought I was looking at a glitch on our Dune analytics, but once I found out someone built a game and people started, playing around with it and they were getting airdropped our silver token, that got me very, very excited on how people can be creative with what they're doing and have fun at the process. And, it helps our KPIs too. It helps our metrics. So it's a win all around. It's just really nice to see. So that's a cool little milestone.
Yeah, I think, what's interesting to me is who's using these platforms right now, because I think it is a total. I don't know how long you guys have been here, probably longer than I have, but I've been in this space since like 2016 or so, and you can really see just a huge evolution of who is here, and I mean what you can do. I remember 2016, you could basically go to Coinbase, then you could send Bitcoin somewhere, and it would take anywhere from an hour to a day, and you're just like crossing your fingers that you did it right. and you know, I think in 2020 we saw an evolution. I think it was you, Warbucks, that said earlier we were like all fascinated with NFTs or these kind of unique assets that kind of lived on chain, and it was like, hey, these are going to be worth a lot one day. And here we are. But I mean, now it's kind of like back to the future where we're talking about tokenized gold and silver and real world assets that
Yes.
are actually coming on chain. So it's like, it seems like we've really come full circle. I guess from your guys' stance, you know, if you could talk a little bit about just how, you know, the different types of users that you guys see, because I think we have the OG crypto crowd that is obviously still here. You certainly have some degens out there, but I think the shift that we've seen recently is now you're starting to see like the really big players come and start to look at these platforms and use them and trial them out. And I tend to believe that, you know, the BlackRocks and Franklin's, well, if you pay attention, Franklin Templeton a couple of months ago put this thing out that's like future markets, and it's like they've been looking at all of these Web3 platforms very much so. So I'm curious if you could just talk about the different types of users that you see. And I guess we'll start with you, Warbucks, since you talked about a game. So you have like gamers and you have traditional people and OGs and everybody.
Yeah, I mean, first off, when you mentioned that you've been in the space since 2016, I was 16 years old. So, dude, I wish I was in crypto in 2016. You know, God, that would have been amazing. But no, I joined a couple of years after. But yes, to answer your question, of course, we started off with the crypto native users, right? The messaging we kind of started off with was hedge your portfolio, you know, increase your exposure to different types of asset classes and try something new because we're bringing in something new on chain. And that was the messaging we first started with. And then that sort of evolved. So that brought us the initial crypto native users, and that evolved a little bit. We started talking to a lot more, you know, TradFi guys. I think earlier this year, so just like about a month ago, and you know, whether that's through Reddit, whether that's through blogs, we started seeing people talk about us and us engaging in those communities, those blogs, right? Because people were interested in how we could bring in these one-to-one backed, you know, collateral backed asset classes that everyone's familiar with, but suddenly you can do so much more with them on chain. So that makes crypto a lot more attractive to these you know, retail traders like these Wall Street bet bros, you know. So that was an interesting sort of user base we also brought in. But now, you know, like you can see, is it's a whole different world at this point where it's people are creating games. There's sophisticated you know, DeFi traders coming in. There's sophisticated TradFi people coming in, trying to innovate on top of what I was mentioning, like those different types of gold tranches, low income gold, yield gold, whatever else it might be. So we're slowly bringing in different types of demographics. We started with the crypto natives. We're bringing in the TradFi bros, which I think is the most low hanging fruit of all. You get both sides of the coin, but then you have everybody else in between that is now finally coming in. The people who want to be able to buy gold, want to be able to increase their exposure that they may not with physical gold at the moment because all the stores around you are sold out. You know, you can suddenly do it on chain and it's so much quicker. You can also do so much more with it, and it brings in the other end of the spectrum, the really, really sophisticated traders too, that come in and try and, you know, arbitrage. They're setting up bots, right, to arb on the delta between the NASDAQ pricing versus the AMM pricing on chain. So it's absolutely crazy. Like, you could see the variety of people coming in. And I think as the space matures more, as we innovate and create more tools, bring in more asset classes, we will for sure see a lot more different demographics come in. And the way people will engage with these, you know, simple assets, these old traditional assets, will be something entirely new. And it's going to be very exciting.
I think it kind of takes us back to like the, you know, the super cliche, like how many people have cell phones but aren't tied into or who don't have access to financial inclusion or opportunities. And like that still is like, I mean, billions, you're talking billions of people that aren't even here yet.
You know, you remind me of, just very quickly, you reminded me of a very cool story I once had with a friend of mine who's a management consultant, where, you know, people in first world countries right now, we may have seen the development of cell phones step by step, right? We saw those. We saw the landlines, we saw the massive brick phones of the 90s, we saw the Blackberries, we saw the iPhones, and everything is growing slowly. And now you have a pretty top-notch phone from Huawei for maybe $150, right? So that's still expensive, but that's a lot more accessible to a lot of the world. But a lot of these developing nations, whether that's in South Asia, whether that's in Central Africa, they are jumping straight to the smartphone. So their level of act, they did not have to go through those growing pains that otherwise the three of us might have seen. And shit, my light died. But they're able to see so much more. And I think that's, just jumping right to where we are now, that entire learning curve, the exponential learning curve has been crazy. And it's just very exciting to see.
Dude, my first cell phone had an antenna. Like
there
it
you
literally, it literally was like probably this big, and the antenna extended out, and I was like, I had like a thing to like anchor it onto my belt loop, dude. I was probably like the coolest kid in school. But I want to ramp us down here, and I want to start with you, Usman, from Oro's standpoint. What are you excited about for 2026? Things that you expect, potentially anything that you guys are launching, and thank you guys both for joining today as we ramp down here.
I mean, I think for us, 2026 is going to be like a very, very key year. I would say, we're building in the right market, gold, tokenized gold. So really excited about the secular trends and the adoption that's going to come from this. If when I spoke to people early last year about tokenized gold, everyone was like, "Oh, who's going to buy tokenized gold?" And now I think the wind has changed and how. So I'm really excited about the market dynamics and what it means for adjusting businesses. I also think what's the wider secular trends on crypto adoption, I think is fascinating, whether it be the amount of different neobanks and the amount of different sort of Web 2.5 companies incorporating crypto. It's just going to mean, distribution avenues. For us as Oro, I'm really excited about, and there's a lot that I can't talk about right now, but I would say, we're definitely building a once in a generation kind company which hasn't existed before. And so if we're able to execute on some of the things that we are working on in the next few months, you're going to see something which is just not existed before, at least in the shape of gold financial markets, if I may say so. So I'm really excited about that, and I think really sort of redefining what gold means as an asset.
Awesome. Yeah, I think that's been one of the shifts that we're not going to get into it here in this one because it's probably its own thing that we've seen over the past year and a half. We're starting to see kind of the emergence of real revenue drivers for the projects that are building in Web3, which I think is interesting, and it's a little bit of a shift, like actual revenue drivers. I want to go with you, Warbucks, here from Remora's standpoint, what you're looking forward to in 2026, and then we'll close out, guys.
Like Usman said, what can I spill alpha? Am I allowed to spill alpha?
Sure.
Will people come after me? I mean, for sure, it's in the name, Remora. We want more, right? We were bringing in more asset classes. We started with equities. We want to bring in more equities, but of course, right now, we're just looking at the NASDAQ. There's so many more stock markets to tap into. I'm based here in Hong Kong. We got the Hang Seng, right? We've got the Nikkei in Tokyo. There's so much more to explore. Not only is there equities, but the different asset classes that we've mentioned throughout this entire conversation. I think there's a lot of discussion on what we're kind of prioritizing at the moment, of course, but the world is our playground, and I'm very pumped for this. And so it's the integration of these different asset classes coming in. Firstly, secondly, it's also about the regulatory framework, right? So we're going to be one of the only in the world to be licensed in a couple of different places. I'm not at liberty to say what license that might be, but we're very excited to attain that. I think that will bring in a lot of trust, and it will open up a lot of doors for us, a lot of institutional adoption too. So that is very exciting in its own manner. And I alluded to a bunch of other problems within this conversation, such as aggregated, DeFi opportunities, aggregated everything, really. So wouldn't a one-stop shop be a nice place to have everything, So that's a little hint for you there, but there's a lot we're working towards, and our team's hard at work. We're having a good time. I think the RWA space is just full of such giga chads like Usman. So it's a good place to be. I think it's going to be exciting, and I'm very pumped to see the evolution of the space going forward.
So you mentioned Hong Kong, and I shared this DM with you before when we were setting up this, and this is this is just a total sidebar. So Hong Kong Monetary Authority released this yesterday. This is their fintech promotion blueprint. It's 42 pages. a lot of people would get very bored at looking at stuff like this, but I've loved deep diving stuff like this for years. And essentially what this is telling you is that by 2028, 80% of the banking industry in Hong Kong is going to be on distributed ledger kind of rails. And by 2030, they kind of have this 2030 vision. You can get maybe a more succinct one, but distributed ledger is all throughout this. I want to make sure to mention, give Usman a follow at the Usman Sol at TheUsmansal, and give Warbucks a follow at Daddy Warbucks. And we're going to add in, obviously, some images of Remora here, but remoramarkets.xyz if you want to learn more. Oro is oro.finance. Give Oro a follow on X at Oro Gold App, and Remora at Remora Markets. I got to catch my breath. All right, so Usman and Warbucks, thank you guys so much for joining today. I think you put it perfectly, Warbucks, earlier, where we're heading towards a future where we're not going to be talking about things like, not only talking about gold and Tesla and things like that, but we're going to be asking, what are you doing with your Tesla? What are you doing with your gold? Because these assets are going to have all sorts of different use cases while still maintaining the value that they've always had. That being said, nothing in this conversation was financial advice. Thank you guys for joining today, and hang out with me while I get this recording.
Thank you so much for having us, Solomon. It was a solid time, man.